Hello everyone, the chart guys have been working on an introductory technical analysis course for some time now, and after surveying hundreds of traders, we narrowed down what the most sought after information was, and we created this course, Entry and Exit Strategies. It's over 5 hours in length, and we go over different signals that the charts tell us for when to buy and when to sell. If you are the kind of trader that is still looking at charts and not realizing what it is trying to tell you, still feeling a little bit overwhelmed, this course is designed to alleviate that uncertainty. So the course outline, we're going to go over the psychology of trading, establishing a game plan, recognizing the different indicators signaling bullish and bearish entries, being able to identify support and resistance levels, poor entries where traders make mistakes and how to avoid them, exit target, knowing where to sell your positions, where to place stop losses to keep those losses minimal, my personal preparations, how I get ready for the trading day, and then piecing it all together, looking back at everything we just learned and applying it to the real world. As a bonus, we'll also look at an intro to finding entries and exits with patterns, and you'll recognize these patterns on all kinds of time frames throughout the stock world, so certainly beneficial to be able to trade off of those as well. So we hope you will check out this course, and again, we feel it will build a foundation of technical analysis knowledge that experience will build off of and send you on the right direction to making more profitable trades. Looking at SPY on the daily and weekly time frame, bulls in full control, negating the bearish reversal candlestick, still riding above the upper Bollinger Band, and in full breakout mode. This is the strongest the market has been since I've ever been watching it, and we have some members saying it's the strongest they've seen since the 90s. So extremely strong, no doubt about that. All-time highs, upper wick showing some profit taking, not significant enough to be an inverted hammer bearish reversal candlestick. We got the Fed meeting tomorrow. That's going to have a significant impact with some volatility, but I don't think there's going to be any surprises that could make this market sell off in a very significant manner. On the weekly time frame, we've got the upper Bollinger Band support. We back tested that level and bounced off of it at the low of this week and then continued to the upside, still very strong. And with 3 trading days left in the week, we're going to see an increase in volume over what we saw last week, which is very strong. Looking at the 5-minute time frame for SPY, the bulls were out right out of the gate. They exploded to the upside. We consolidated, and it looked like we might see a bearish turnaround, and that's because we were watching IWM, and IWM has been a little bit of a lead indicator for the S&P 500. Look at that pullback on IWM, just an all-out dump. So we were prepared for that to potentially happen with SPY, but once SPY held the low of the day, which was 227 on the dot, we formed a higher low at 227.02, essentially a double bottom. Bulls defended that level, and they really turned things around here on this candlestick with a spike in bull volume. We had a higher low and then a higher high on the bounce attempt, and that saved the day for the bulls right there. And we saw some really nice upside for the next hour and a half, 2 hours after that happened. There's your profit taking into the afternoon and a little bit more at the end of the day. But we did hold that support of 227.62. So supports to look at going into tomorrow just from the trading action today, 227 and 227.62. We've got key 5-minute moving averages as support. We look at the hourly chart, and the bulls are still in full control. Look at the past 10 days, just a beast of a bull chart. 5-day time frame, exponential support still holding. You can see the RSI on the hourly got up to 83 this morning before consolidating. Normal, healthy consolidation, and the bulls in full control. So those levels, this is why even if you're not a day trader, looking at the 5-minute action can give you key support levels that you otherwise would not see on the daily time frame. So important to be checking all time frames pretty much no matter what. It just depends on how much weight you put into what each time frame is telling you. If I'm swing trading, I'm not going to put a ton of weight into the 5-minute chart, but you can pick out key support and resistance levels that can help with your entry and exit decisions. So we'll see what tomorrow brings with the Fed. And again, a rate hike is priced in my opinion. Everybody's expecting it. So I can't imagine we'll get news that would lead to a big time sell-off. I appreciate you watching. We'll check back in tomorrow.